Ladies and gentlemen, good day and welcome to Sobha Limited Q2 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saheshwar Ravikar. Thank you, and over to you, Mr. Ravikar.
Good morning, everyone. On behalf of ICICI Securities, I would like to extend warm welcome to all the participants joining the Sobha Limited Q2 FY26 result conference call today. We are pleased to have with us Mr. Jagdish Nangiani, the Managing Director, Mr. Yogesh Bansal, the Chief Financial Officer, representing the management of Sobha Limited. Before we commence with the proceedings, I would like to take this opportunity to wish everyone a very happy Diwali. With that, I would now like to hand over the call to the management for their opening remarks, following which we will move on to the Q&A. Thank you, and over to you, sir.
Good morning, everyone. This is Jagdish from Sobha Limited. Thank you, Saheshwar. We are pleased to connect with you today post declaring our Q2 and H1 26 financial results. We had already shared the details of the operational performance in the first week of October. In continuation of our pursuit to improve our timing of declaring quarterly results, this quarter as well we have done well, thanks to our improved processes across functions enabling this outcome. We delivered a strong and stable performance in Q2 this year, building on momentum already created in the previous quarter in terms of real estate sales, with highly integrated sales and marketing efforts. It also reflects the steady demand on the luxury real estate in a growth economy, with improving macroeconomic parameters and timely government interventions. During the first half of this year, we achieved a real estate sales value of 3,981 crores, which is higher by 30% compared to the last year in the same period. Bangalore has contributed 48%, NCR 38% and 10% from Kerala region of the overall sales. Our total sales for the year were supported by the sale of 1,576 homes, 2.84 million square feet across all operational markets with an average price realization of 14,028 per square feet. In Q2 alone, we have achieved sales of 1,902 crores, consisting of 770 homes, with Bangalore contributing 70% of the sales, despite any new significant project launch. Coming to new project launches, cumulatively in the past 6 quarters, we launched over 10 million square feet in 12 projects. However, the slower first half launches were impacted due to several external and internal issues, and we are making our best efforts to catch up in the second half and launch at least 8 to 9 million square feet for the entire financial year across 7 to 8 projects. We are happy to inform that during current week, we will be launching Sobha Magnus in South Bangalore. Overall, we have a strong residential pipeline of 15.96 million square feet across 13 projects in 9 cities, and commercial pipeline of about 0.74 million square feet across all our operational cities. We envisage to launch these forthcoming projects in the next 4 to 6 quarters. Also, we are working on our subsequent project plans rapidly for about 24 million square feet. And in addition to these launches, our existing inventory at the end of the quarter was about 10 million square feet with a potential sales value of 13,000 crores. Our project delivery teams have also increased the pace of project completions with completions of 2.25 million square feet in the first half of the year. During the quarter, we completed 1.18 million, which is 591 homes. We aim to complete overall at least 5.5 million square feet in this financial year. Improved profitability would reflect as we increase the volume of project completions. In addition to this, our contractual and manufacturing operations are steady with contributing to about 700 crores in this in terms of revenue in this financial year. With this, I hand over the call to Yogesh, our Chief Financial Officer, to provide details on the financials.
Good morning, everyone, and thank you for joining us today. Wishing everyone warm greetings of the Diwali. I am pleased to share our financial performance for Q2 and H1 for the year 25-26. I will begin with cash flow, covering the quarterly and half-year performance and future visibility, and then briefly touch upon the P&L before opening the floor for the questions. During the quarter, from all businesses, we collected total of 2,046 crores. We crossed the 2,000 crore quarterly collection milestone for the first time, thereby recording a historic high. For H1, we collected rupees 3,824 crore, recording a healthy 30.9% growth over H1 25. Real estate business contributed 90.2% to overall collection, that is 1,846 crore in Q2 and 3,445 crore during H1 period. Contracts and manufacturing businesses contributed 200 crore in Q2 and 380 crore in H1. We generated 513 crore of net operational cash flow in the quarter for the half year, and it was 909 crore, registering a significant growth of 79.1%, allowing us more room for investing in future growth. We spent 632 crore on land-related activity, almost 2x the amount we allocated in H1 25, in line with our commitment to further strengthen future pipeline for growth. Post financial outflow, capex and dividend payout, we generated net cash flow of 63.5 crore during Q2 and 120 crore in H1 26. Company closed the quarter with net cash position of 751 crore, underscoring a very healthy and strong financial footing. Weighted average interest rate has come down during the quarter by 60 basis points. Looking ahead, we have clear visibility of future cash flow expected from our ongoing and forthcoming inventory. From all completed and ongoing projects, we expect total 22,867 crore of future inflow. The cost to complete this project is estimated 13,000 crore, thereby generating marginal cash flow potential of close to 9,800 crore at project level post sales and marketing spend. We should able to realize this over next 4 to 5 years. Additionally, we expect to generate 7,100 crore of marginal cash flow from forthcoming projects of 16.69 million square feet, which shall be launched over next 6 quarters, and the cash flow realized over 5 to 6 year time frame. Overall, we have strong financial footing with robust future cash flow visibility. We are achieving better operational efficiency every quarter, giving us the confidence to pursue further growth opportunity. Now coming to P&L. For the quarter, we recorded total income of 1,469 crore and 2,371 crore for H1 FY26. Real estate income contributed 1,200 crore during Q2 and 1,889 crore for H1 FY26. Contract manufacturing and retail business contributed 209 crore in Q2 and 371 crore in H1. We generated EBITDA of 157 crore in Q2 with margin of 10.7%. For H1, EBITDA was 231 crore with margin of 9.7%. PAT recorded for Q2 72.5 crore with margin of 4.9%. In H1, we recorded 86 crore with a margin of 3.6%. Our total balance revenue to be recognized from already sold unit as on 30th September was close to 18,000 crore. This is Sobha share only. During the quarter, we have received demand for ground rent from Bangalore Authority for OC granted in earlier year. So as a accounting principle, we have made provision of 27 crore in the quarter itself. So once again, thank you for you all for your participation. With this, we can now open the call for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Sukrit D. Patil with Eyesight Fintrade Private Limited. Please go ahead.
Good morning to the Sobha team. I have two questions, one for Mr. Jagdish and one for Mr. Yogesh. So, to Mr. Jagdish, my question is, as you scale in a market that's becoming more price sensitive and competitive, what are the biggest execution challenges you foresee, especially in balancing design quality and delivery timeline and customer experience? How are you preparing the organization to sustain this kind of a differentiation? Yes, sir. Thank you.
Thank you, Sukrit. I think you had one more question for Yogesh, which we'll take once I complete this answer. Well, as you are aware, Sobha has a unique execution model, which is backward integrated, where the entire design, execution, and some parts of the manufacturing are done in-house. This gives us a unique advantage in terms of speed of delivery and also managing the cost of delivery. While that has not been very helpful during the very high inflationary period which we have seen between 2021 to 2024, going forward, if the inflationary pressures continue to be stable like we have seen in the past year or so, then we should have a unique advantage in terms of managing the cost and delivering within time. And as you know, the reliability and the quality of the delivery will clearly put us ahead of the competition when it comes to the customer satisfaction. And that we are continuously focused on, and we are building our teams across functions and mainly the execution teams to make sure that we enable the organization to deliver for the scale that we are preparing for.
Okay, thank you. And my second question to Mr. Yogesh is, with the rising input cost and compliance burdens, how are you planning to protect the margins going forward, especially in terms of procurement, pricing, and project phasing? What financial levers are you emphasizing to maintain profitability without compromising quality? Yes, thank you.
Thank you, Sukrit. So, as you are aware, we are backward integrated company, wherein most of the things we are doing in-house. With this, we have hand on all the cost and procurement. We real-time monitor all the costs. That's if we have to take price escalation because of increase in raw material, we take immediately so that we can protect our margins. That's why we keep track estimation our cost regular basis so that financially we should able to keep our margin intact.
Thank you. Mr. Patil, please rejoin the queue for more questions. A reminder to all the participants, please restrict yourself to 2 questions. Next question comes from the line of Pritesh Seth with Axis Capital. Please go ahead.
Yeah, good morning and thanks for the opportunity. First on the sales performance of this quarter, we saw a good surge in sustenance demand. Just wanted to know what actually worked, especially I guess in the projects like Town Park. What went right for us this quarter to have a healthy contribution, and then how do you see the Gurgaon projects which were launched last year, any sort of action you think you need to take there to have a good velocity on those projects? Yeah, that's my first question.
Thank you, Pritesh. The Q2 sales, like you have observed, the majority of the contribution has come from about 70%, right? And all of them are sustained sales. This shows good on-ground demand for the end-user-based products, and particularly within the ticket sizes of 2 to 3 crores. And Town Park, one of the projects which has that kind of inventory, has done really well. So ticket size definitely helps in terms of the sales, and of course our sustained sales and marketing efforts also has helped. And specifically when it comes to projects like Town Park, where the scale of the project is large, the customers are far more gravitating towards larger projects where the communities are larger, and hence this is a distinct advantage in certain projects like Town Park, and that has created that positive or virtuous cycle of good sales. That's on Bangalore sustained sales. And when coming to your question related to Gurgaon sales, the Gurgaon sales we have like I mentioned earlier, we have made certain changes, and we are seeing reasonable end user demand for our products now. And we have made changes in our organization as well, in terms of how we, in terms of people, and in terms of how we approach the channels that do provide impetus to the sales. And both these seem to be working positively, and we hope to see good results in the second half.
Sure, got it. Just on Town Park, we launched this project I think in March or February this year, and after 6 months we are seeing this good set of demand. That's usually kind of timelines that people are taking now to decide on purchasing a home. Just trying to understand, because at launch we didn't see such good response that we are seeing now. So just trying to understand that this is more of a decision-making time that these the customers are taking right now, or something else which has worked. Yeah.
Well, I would not say that at the launch the response was lower. We did really well even in March when we launched the project. In the first quarter of this financial year, that's where we saw a little bit of hesitation in terms of customer purchase decision making. But since we have multiple ticket size products, and there is timing of ability to time their cash flows in terms of purchase in these large projects, those have really helped us push and accelerate the sales in this specific project. But otherwise, the project start out really well, and it's a very large project. And as we continue to progress during the last 6 months, we continue to release new towers, which has been very, very helpful in making customers taking choices from multiple products that are available.
Thank you.
And one other aspect which we have seen is also in Town Park itself. We had earlier, a few years ago, we had launched Manhattan and Brooklyn, which are part in the same location, and we have started delivery of our first tower in Manhattan. So delivery confidence also is seen by the customers, and the kind of infrastructure that's getting developed around the whole location also gives a lot of confidence to customers.
Thank you. Mr. Seth, please rejoin the queue for more questions. Next question comes on the line of Biplab Debarma with Antique Stock Broking. Please go ahead.
Good morning, and wish you all a very happy Diwali. So my first question is, you had a very good, strong quarter. Congratulations on that. Although you didn't have any major launches. And in the second half, I understand that you have a significant number of large launches lined up. So if all these launches materialize as planned, looking at the strong absorption in Bangalore and Noida, you have a few launches in Noida. Is it possible we cross 10,000 crore of pre-sales this year?
Thank you for the wishes, Biplab. The launches in the second half seems to be on track, and if the overall momentum continues and some parts of it, if we are able to achieve similar momentum in all the project launches, because these project launches are spread across some of the other cities where launch is not necessarily gives the biggest impetus to sales. There are steady launches in locations like Kerala, in Chennai. So given that, we would stick to still our earlier guidance of about 8,500 crores of what we are doing. If we can do, we aim to do much better than that. If we are able to do it, definitely it will be a positive surprise for all of us.
Okay, sir, that's I think, that's good enough. Sir, the second question is, your one project got delayed, launches. Good to hear that your project Magnus is getting launched in third quarter, but it was supposed to get launched in second quarter, but delayed due to approval-related issue. So, how these approvals things are progressing? Do you see any risk of delays that could push some of these launches in this current financial to the next financial year? How is this? How do you see this approval thing? Is there any risk, uncertainty regarding that? Thank you, sir.
Good question, Biplab. Related to specifically the Magnus launch and around some of the aspects of OC that we have faced in the past quarter, the main reason for this was the restructuring of the BBMP, which is now Greater Bangalore Authority, and that restructuring had taken a little bit of time for the actual coming into effect, and which has thankfully come into effect. And now once all the systems are in place for all the 5 corporations to be in operation, then we don't foresee any major reasons for delay. Other than that, we have the rest of the approvals in Bangalore and in the rest of the country. They seem to be on track. As such, there should be no issues.
Thank you. Mr. Deb Burma, please rejoin the queue for more questions. Next question comes on the line of Girish Chaudhary with Avendus Spark. Please go ahead.
Hi, good morning, Jagdish, and performance despite no launches, and also, encouraging to see the cash flow, overall cash flows. And couple of questions. Firstly, on the reported margins, again, we are seeing these to remain low. So how do you think about these numbers, and especially the current project level margins? If you can just give some view on the margins first.
Right. Thank you, Girish. On the reported margins, unfortunately, this quarter specifically, although we could recognize good revenue, there were, like Yogesh has mentioned in his initial comments, we had to take provision for certain charges which are related to BBMP ground rent, which were not earlier recorded because of we had a favorable outcome in the previous, whenever we completed projects. However, since because of new demands that have come in from the authority, we had taken that provision. Otherwise, we could have been slightly better than what we have done. And there are a couple of other small transactions which we have done, which have led to slightly lower higher costs, and which are reflective in the numbers. But otherwise, if you look at the overall big picture in terms of how we are going forward, which is where we have about 18,000 crores of revenue to be recognized from sold units, those margins are extremely protected, and we are, like I have been mentioning in my previous calls, the EBITDA margins in those projects are between 30 to 35%, or we estimate it to be closer to 33 to 34%, and those will start getting reflected in the as we complete those projects. That said, in the near term, in the next quarter, also we have several project completions. Like we are increasing the scale of completions, and as those completions come through and some of those good margin projects come through, we should be able to do decent margins in this financial year. From next financial year, as we complete some of the own projects like Neopolis, wherein we have good margins embedded in those projects, so our margins should significantly improve starting from next financial year.
Got it, very clear. Secondly, if you can give us some update on the Hoskote launch. Where are we in terms of the overall approvals, and any thoughts on the phase 1 GDV, so if you can just throw some light on this project.
Yeah, there has been a very good progress on the first phase of Hoskote, which we are aiming to do at more than 5 million square feet, which we have included in the forthcoming projects this time in our quarterly presentation. And we are making good progress towards the approvals. The design is completed, and we have applied for the initial plans. So in the next, our current aim is to launch the project in the first quarter of the next financial year.
Thank you. Mr. Chaudhary, please rejoin the queue for more questions. Next question comes from the line of Dhruvesh Sangvi, an individual investor. Please go ahead.
Yeah. Hi, Jagdish. Am I audible? Sorry.
Yes, Dhruvesh.
Yeah.
Please go ahead.
So, thank you. At the industry level, across major parts of India, we see that almost all large real estate developers are in very good shape in terms of balance sheet. And all are now competing for the larger sized complexes because that's the clear trend. In this context, when we look at new business development, we probably at Sobha have engaged. How would you rate Sobha's BD in the last 1 year? And why I'm asking this more specifically is to understand from a competitive landscape perspective that is the cost of acquisition increasing in a market where the sale prices are probably at hitting the roof now? And if you can give some sort of an understanding so that today's land acquisitions will lead to margins 3 or 4 years later, how profitable and how profitable will the growth be in the future? Because growth is coming, but I'm just worried about the 3 years hence profits, because that will be coming from today's decision making.
Right, Dhruvesh. No, good question, which is essentially surrounding BD for these projects. In fact, if the margins or results of those new projects that we are going to do business development today would actually result in some kind of P&L impact probably after 5 years, because you would do BD today and then probably launch the projects in a year or so, and those projects